Investing is like a magic wand that helps you make more money, become financially free, and secure your future. But it's a bit like a tricky maze filled with traps. If you're not careful, you might mess up your plans for a comfy retirement. Now, it's okay to make mistakes while learning, but some blunders can cost you a lot and mess up your money dreams. In this amazing video, we'll show you the most common mistakes people make when they invest and how to avoid them. We'll give you the power to make smart choices and increase your chances of growing your money. Oh, and we've got a secret at the end, something almost everyone messes up that can hurt their success. So, stick around to find out what it is. Our channel is dedicated to help teach people about money, personal finance, investing, and financial independence strategies. If you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. Also, share it with your family and friends. By avoiding these mistakes and continuously improving investing skills, investors can pave the way for long-term financial prosperity. Number 1. Diving in blind, a common investor pitfall. Imagine you're about to go on an exciting treasure hunt for your money, but instead of rushing in, you should stop and make a map first. You see, when you invest your money in things like stocks, bonds, or real estate, it's like searching for hidden treasure. If you don't do your homework, you might end up with less money instead of more. So, what do you need to do? You need to learn about where you're putting your money. Check if it's a good place to invest. Look at how well it has done in the past. And also, see if there are any dangers or risks. But that's not all. It's not just about where you're putting your money, it's also about what you're buying. When you go to a store, you check the quality of what you're buying, right? Well, it's the same with investments. You need to look at how healthy the company or thing you're investing in is. Are they making money? Do they have a good team running things? And are there a lot of other things like them out there? So, in simple terms, take your time and learn about your investments. Don't just guess or follow your gut feeling. When you know what you're doing, you'll have a better chance of making more money and feeling confident about it. It's like being a smart explorer on a treasure hunt, not just a lucky guesser. Number 2, the emotional investor's dilemma, finding rational paths. Investing can be like a roller coaster ride because your feelings can make us do silly things with our money. Sometimes we get scared or greedy, and that messes up our decisions. Imagine you're playing a game and you're winning a lot of points, but then you see something scary, like a monster in the game. That fear might make you do something really quick and not smart, like quitting the game. In investing, fear can make people sell their investments when they shouldn't. On the other hand, greed is like when you want more and more, like extra points in a game. This can make you buy things in a hurry, even if they're not a good idea. In investing, greed can make people buy things just because everyone else is talking about them. Also, when we hear good or bad news, we sometimes act without thinking. It's like reacting quickly when you hear exciting or scary things in the game. To be a good investor, you need to be like a wise player. You should have a plan and stick to it. This plan is like a map for your game. It helps you make smart choices and not give in to fear or greed. You can also set rules for yourself, like not putting all your points into one thing. And if the game gets too scary or not fun, you can decide when you want to stop and leave. It's important to remember that news is like a part of the game that's meant to make you feel things. There will always be things to worry about, just like there will always be monsters in the game. Try not to let these short-lived feelings control your decisions. Instead, focus on your big goal, like winning the whole game. Number 3, the dangers of not diversifying your investments. Imagine you have a basket and you want to put all your eggs in it. But if you do that and something happens to that one basket, like it gets dropped or stolen, you'll lose all your eggs. That's not a good idea, right? The same goes for investing your money. If you put all your money into just one thing, like stocks or a particular company, and something bad happens to that thing, you could lose a lot of your money. So, it's like putting all your eggs in one basket when you invest a recipe for disaster. To avoid this disaster, you should spread your money around. Don't just invest in one thing. Invest in different things. These different things can be like different types of investments, such as stocks, bonds, real estate, or other stuff. And they can be in different areas, like technology, health, or energy. When you spread your money like this, it's called diversifying. Diversifying helps protect your money. If one of your investments does poorly, the others might do well, and that can balance things out. So, by having a well-diversified portfolio, you're not taking too much risk, but you can still earn some rewards. It's like a seesaw. It stays balanced. This way, if something unexpected happens, like the stock market going crazy, your investments are safer. To diversify, you can choose things like broad market index funds or ETFs. These are like baskets that already have a mix of different investments, so you don't have to pick them all yourself. This can increase your chances of reaching your financial goals and help you face the challenges of investing with confidence. Number 4, timing the market, a risky adventure best avoided. Trying to time the stock market is like trying to catch a lightning bolt with a butterfly net. Super tricky, even for the pros. It's all about trying to buy stocks when they're super cheap and sell them when they're super expensive, based on what's happening in the market right now. But here's the deal. It's like trying to predict the weather perfectly. Nearly impossible. People who try to do this often end up missing out on the big long-term money they could make, or they make bad choices and mess up their investments. So, instead of chasing this tricky market timing game, it's smarter to think long-term. What does that mean? It means having a plan for your money that matches your goals and how much risk you can handle. This way, you can ride out the ups and downs of the market and let your money grow over time. You need to be patient and stick to your plan, even when the market gets all crazy. Trying to beat the market or do better than everyone else might sound cool, but it's like trying to win a race against really fast runners. Very tough to do. So remember, focus on your long-term goals and stay cool when the market gets wild. That's the smart way to play the money game. Number 5, investing smarts, avoiding the quick rich trap. Successful investing is like growing a beautiful garden. It's not a quick way to get rich. Instead, it's a journey that needs 3 important things: patience, discipline, and a long-term view. Think of your money as seeds you plant in the ground. These seeds won't turn into towering trees overnight. They need time to grow and weather the seasons. Sometimes the weather or the financial markets will be good and your garden will thrive. Other times, there might be storms and your plants might struggle. That's how markets work. They have ups and downs. Many people make the mistake of wanting their garden to bloom immediately and make lots of money fast. But that's like expecting a tiny sapling to become a giant oak tree in a week. It's just not realistic. You shouldn't keep digging up your garden to check on it every day. Likewise, you shouldn't keep changing your investments based on daily market ups and downs. It's better to have a plan and stick to it. Having patience means you let your investments grow steadily, just like your garden. With discipline, you follow your plan, even when things get tough. This way, you can handle the tough times and give your money a better chance to grow over the long run. By thinking long-term, you're like a skilled gardener who knows that beautiful plants take time to flourish. In the world of investing, this mindset helps you stay strong, confident, and have the potential for lasting financial success. So, just like a garden, let your investments grow with time. Be patient, stay disciplined, and think about the long term. This way, you'll have a better chance of seeing your money blossom and thrive. Number 6, avoiding investment pitfalls. The risks of following the crowd. Don't be fooled by hot investment tips from friends or following what everyone else is doing. It's like chasing a train that's already left the station. Sometimes people get all excited about a stock, and by the time you hear about it, the best money-making part is over. Also, when everyone jumps on the same investment wagon, it can lead to some crazy price jumps that don't really make sense. Think of it like everyone going nuts for a new toy, even if it's not that great. So what should you do? Well, you've got to be smart about your investments. Don't just trust what everyone says. Do your own homework, look into things, and think about what you want to achieve with your money. Be careful of trends that promise you'll get rich super fast. It's usually too good to be true. Take your time, research well, and consider if an investment makes sense in the long run. If you're feeling lost, it's okay to ask someone who knows their stuff, like a financial expert. They can help you stay on the right track and not get caught up in the herd's excitement. So be wise, be patient, and make informed choices with your money. Picture investing like a thrilling adventure. To succeed, you need three things: knowledge, discipline, and a long-term vision. But there are some common mistakes you should dodge if you want your investment journey to be a big win. Always keep in mind that learning about investing is like a never-ending story. Staying updated, being flexible, and sticking to a clear plan are your secret weapons for victory in the always changing world of money matters. So, get ready to embark on this exciting financial quest. Thank you for tuning in. Don't forget to subscribe and ring that notification bell for more awesome financial tips and strategies.